Ankit Agarwal joins us. Let's understand what his understanding of the sector, the telecom sector capex, and his take on the 5G opportunities. Ankit, it's your first time, at least we are interacting on this forum, so a warm welcome. Thank you for joining us. I'll get into specifics of Sterlite Tech, but before that, I want to understand the entire change which is now coming in the telecom sector. Pricing power is coming back, ARPUs are going higher. This is one sector which has not seen a sizable capex in last couple of years because every company was in a cost cutting drive. Now that ARPUs are coming back, do you think the sector has revived, the cycle has revived, and for in telecom ancillary player, the cycle has started again?
Absolutely. So firstly, thank you, Nikunj, for having me on the show. I think, certainly in India, we see that this will be a pretty significant capex cycle going forward. I think a lot of the reforms, structural reforms have now been announced or will come through in the next few months. We certainly believe that the sector will get healthier with every passing quarter. There has been talks of ARPU going towards 200 rupee levels and then eventually going all the way up to 300. And we believe that it is a function of time itself where ARPUs will certainly go to at least 200 in the near term. I think that's extremely important. I think another big factor will be the 5G auctions. Historically, a large portion of the telco investment was going towards the spectrum rather than investments in the network itself. And I think certainly as recent as last few days, our telecom minister has talked about specific pricing for 5G, which will be much more reasonable. And I think these are two or three elements. In top of that, I also believe that there will be large investments in India linked to BharatNet. Prime Minister has talked about 1,000 days of building out a vast fiber network to every of our 6 lakh villages. And I think that will also be an investment of close to 30,000 crores in the next 2 to 3 years. Each of the operators combined, and in terms of total network investment, we believe the network investment for 5G itself will be in the range of around $60 to $70 billion over the next 4 to 5 years. And I think some of the execution challenges that we have seen typically in the sector in terms of right of way, ability to deploy fiber optics or the towers, I think a lot of that will start getting simplified both from the center as well as the states.
Just to clear the air for our viewers, a couple of years ago we did see a big price drop, and that was a global price drop which shook the entire industry. A lot has changed after that, which is that the Chinese government has contracted, commodity prices have gone haywire. What is your understanding of the global landscape? Because ultimately we have to look at the global landscape before we get the complete picture.
Absolutely. So maybe one is in terms of reflection, as you mentioned. Certainly, I think China itself is very aggressively looking at deploying 5G. They are the world leader currently in terms of 5G deployment, with close to 250 to 300 million subscribers already, and a clear ambition to reach all 1 billion subscribers in the next 3 years. So I think that's something that will continue very large investments for them. There's still a vast portion of China which will still need to get built out in terms of fiber to the home, fiber to enterprise. And I think that will ensure that probably for the next 3 to 5 years, there's continued investments by the likes of China Mobile, China Telecom, and Unicom itself. Globally, we also see a very large investment in networks getting built out, especially in the US and Europe currently, which is something that is extremely exciting. Just as recent as a few weeks ago, the US announced close to $65 billion of investment just in broadband infrastructure as part of the infrastructure bill. And similarly, variety of countries across Europe, including UK, France, Italy, and now most recently Germany last week, have announced anywhere between 10 to $20 billion for investment in their networks. And particularly, I think this has been accelerated by COVID, where the government now clearly has a mandate to connect the unconnected. And I think the other element in all of this is that there is a huge shift in terms of capital, where instead of just the telecom operators investing, you're now seeing government invest, but equally now you're seeing large investments from private equity players, both in India, but now increasingly in every large market globally that we see. And the private equity players, the likes of KKR, EQT, and many others, are seeing this as clear and positive investment cycles over the next 5 to 10 years.
Now, your guidance of 10,000 crore on a base of 6,000 crore, it's almost a 50% growth. is this based on assumptions that you will get future orders, or this is based on order booking already and this is given for FY23?
Yeah, so I think it's a combination of both. Because we do have an open order book of close to 11,000 crores. We certainly believe that as we look at our focus, there are 2 or 3 areas that give us confidence towards this growth. Number one being that we have already started a very strong pivot in terms of our balance between India and outside of India. As recent as our Q2, which we shared, more than 50% of our revenue now comes from outside of India, where 43% is in EMEA and about 12% is in US. Both of these markets, as I just spoke of, are going through this massive multi-year network build out. And we are very, very clear that we will play a large role in that. As we recently shared, even just in Europe, we have close to 26% market share in our optic fiber business. So clearly, this is a strong tailwind that we will be riding on. In our services business itself, we see 3 or 4 large tailwinds. One is the network deployments will continue to accelerate in terms of fiber to the home, and soon this switch from 4G to 5G that we believe. Second part is the BharatNet deployments will kick off, we believe, in the next few months in terms of in the PPP model that the government has spoken of. And then third is we have our kickers where we've been investing in terms of the wireless business as well as the software business. And we believe those will start generating meaningful revenue in the next 3 to 4 quarters.
Sure. Ankit, you've given us a great macro picture, but I want to get a little bit micro here and talk about, where exactly the growth is going to come in from. You briefly alluded to the 5G opportunity. Just wanted to understand how scalable is it and what is the addressable market that we're looking at in the future?
Absolutely. So, in terms of STL itself, we've actively invested over the last 3 to 4 years to grow our addressable market. We've gone from about $8 billion to about $40 billion, which is our overall addressable market. Within that, I would deep dive on 2 or 3 things. One is at a macro level with 5G, there will be a tremendous network deployment, both of the wired and wireless. We believe that you need between 15 to 20 times number of small cells and macro cells for the same coverage and capacity in a 5G network versus a 4G network. And each of these nodes will now need to be connected 100% by fiber and as well as power. So I think there will be a tremendous densification of networks, especially in the tier 1 cities, where we believe that 5G will come first. The second part is that we have consciously looked at one of our segments, which is in addition to our fiber optic cables, is the optical interconnect. Now, this is a very large business globally in the range of $8 to $10 billion. With our acquisition of Optotech in Italy, we now have access to this market, and we have been growing this business very steadily over the last few quarters. We believe that this will be a very big trigger for our growth. Current attach rate, which we believe is about 8%, will move towards the 70 to 80% in the next few quarters that we see as a growth lever. In addition to this, linked to 5G, we're also seeing large amount of network build out both in India and UK. We've already secured close to 500 to 600 crores of orders for network build out in the UK as well. And we continue to believe that it is not constrained by demand, but actually constrained by the ability to execute on the ground and ensure that the execution happens for a 5G network of the future. So these are 2 or 3 very strong levers where we believe linked to the 5G network, we have a right to play. In addition to this, we are building a very strong wireless portfolio. And this is something we're very proud of as an Indian company. We're the first company to offer an end-to-end 5G solution. We've partnered also with the likes of Facebook, now Meta, to build and co-develop with them indoor as well as outdoor 5G solutions, as well as Wi-Fi 6 solutions. So when you look at the entire network stack of a 5G, whether it is looking at for retail, whether it is looking for enterprise, we've built the full portfolio. And as this network gets deployed globally over the next 4 to 5 years, we believe we'll have a strong right to win.
Interesting. So a question then for your shareholders, your net debt as of September 30th, 21, it stood at about 2,815 crore rupees. Would it be fair to say that net debt to equity has now peaked and our cash flow is then going to be strong enough to bring down your debt levels to say 0.5 times in the next 1.5 years?
Absolutely. So I think that's something that we're absolutely committed to. We've talked about 3 targets. One we touched on already in terms of 10,000 crore run rate by Q4. The second one is of FY23. Second one was in terms of bringing the debt to equity from about 1.2 levels to a 0.5. And the third was maintaining ROC of 20%. So we're absolutely committed to these 3 targets that we've laid out. In terms of debt to equity, what we've shared is that we're largely at the end of our capex cycle in terms of taking our fiber capacity to 50 million. We've also talked about taking our cable capacity to 42 million. So to that extent, there's about 200 crores of capex, incremental capex that is now in terms of our facilities in US and UK that will come up. But apart from that, we certainly believe that the cash flows from the business will be used to reduce the debt towards our stated target.